Today, 60,000 and counting. Hello again, it's Martin North from Digital Finance Analytics, one of the latest posts covering finance and property news with a distinctively Australian flavour. And today I'm joined by Caroline Bowler, MD of BTC Markets. Hi Caroline.
Hello, how are you doing? Great to be back.
Yeah, well, it's great to see you back and in your office after so many months of being locked out. So reality is sort of beginning to break back.
Yeah, absolutely. I can confirm that the coffee is better than at my kitchen table, so that's a good start.
But although reality is breaking back, I mean, we have to talk about Bitcoin, don't we? And what's been happening in the Bitcoin market. I mean, massive run up. We spoke last year about the
Yeah.
fact that Bitcoin is beginning to evolve from being a little bit of a sort of a speculative thing on the edge of everything to something much more mainstream and significant. And of course, Elon Musk just announced significant investments in Bitcoin himself. So that's given it another impetus.
Absolutely. So Tesla have now got 1.5 billion US dollar worth of Bitcoin on their books, company books. We're joining, many others such as MicroStrategy, who've been very fervent about it, Mass Mutual, etc., Square. There's a few names adding into that list, and this is only the start of it. I don't think anybody thinks that this is it, and there'll be no further announcements to come. And it's reached that, it's gone past that tipping point, which I know is something that we talked about probably 9 months ago. Was about that tipping point being reached and surpassed, and we're on that trajectory now. But I mean, keep in mind that 1.5 billion is, I think, less than 8% of their cash on reserve. So they haven't gone all in, because they haven't gone all in on it. But what they've done, actually, and to be fair, like the investment size that they've gone with is probably reminiscent of a lot of the investment sizes that we've seen in percentage terms of SMSS and companies that are coming onto BTC markets. I know for us, that's a trend that we've observed very much so. There's increasing kind of ticket sizes as they've come in, but also that percentage of portfolio. We always knew that it was about between 5 and 10% of an SMSF investment into crypto, and which is kind of normal for any alternative asset class. And so it looks like Tesla's taking a leaf out of our SMSF book.
Well, they're obviously following the playbook, but it is significant and important to understand a couple of things. Of course, Bitcoin is more than 70% of the total crypto footprint, and there are more than 4,000 coins out there. So this is right at the pinnacle. But I guess the other point to make is that the volatility that we've seen, is partly to do with all of the new investors coming in with small investments, but also now more people with more substantial investments, and corporates and financial services entities also now definitely playing the game as well.
Yeah, absolutely. I mean, that's something that we've seen, kind of doing analysis of some of our numbers over 2020. And by the fourth quarter of 2020, we were seeing the average individual trade size was 20% up on the first quarter. So we're definitely seeing that upward trajectory. But and as you had said, kind of Bitcoin is the big mama, if you like, of the cryptocurrency and digital asset space. But that's not to disregard what's been happening with some of the altcoins as well. If you look at like Ethereum, which has gone on the gallop, it was trading about, average about $500 Aussie dollars about a year ago, around March, April time. And today it's over $2,000 on our exchange. So I mean, there is a shift going, not just in the big mama, but also in some of the other, as I say, some of these alternative coins, which really speaks to the development and their growth across the whole asset in general. And that, again, is something that you and I have spoken about on more than one occasion as we've kind of gone through some of the different flavors and quirks, features, different tokens and coins that are out there. So for us, people are kind of going, are you surprised? I'm like, no, we're not surprised. This is something that we have predicted and expected, and it's kind of happening to our minds anyway, in a rather kind of calm and measured manner. I know people go and do bring up the volatility issue, quite rightfully, because this is on a trend. But when you take a step back and you look at, say, BTC over the past 12 months, it has been a relatively graduated albeit at the end of of 2020 into 21, quite a sharp rise, but still it's quite a graduated point to get to that stage. Volatility in other asset classes is considered something of a feature rather than a bug. And it's kind of bizarre how Bitcoin's been lumped into as it being a negative. I know the last time I was talking to people about it, like the China Stock Exchange had dropped like 13% or something ridiculous, and people weren't making such a big brouhaha about that. But for us, for Bitcoin, we always get lumped in with the volatility piece.
Yeah, well, I guess because there is still, I think, a level of deficit in terms of people understanding what it really is and, where it might be heading. But it is worth just reflecting on, of course, the massive amount of quantitative easing that's been going on, which has created a lot of liquidity. A lot of people got government checks and they're looking for somewhere to put it. And frankly, I think it also underscores two other things. The first is a lack of confidence in, if you like, mainstream markets and mainstream finance. Secondly, the fact that access to these finance is more democratic. It's more devolved, and I guess in a way the recent issue with regard to that for Americans got to with games, is a good example of people betting themselves against the big hedge funds. I mean, there's a lot going on. I think that more and more we're going to see the crypto world as something which is almost seen as a bit of a safe haven.
Yeah, it was funny you should say that. I mean, I know we were kind of watching what was happening with Gamestop and people were kind of having a wonderful time with it. But for us, it was so embodied as the kind of spirit and the ethos of the early days of the crypto, if you like, that it felt quite comfortable and quite normal for us, I suppose, really to watch it. Well, and I agree with you that there is that certain amount of, well, this is kind of blowing open the doors of what was always felt as either too impossible to access, or it was too elusive, or it was too difficult to understand. And now people are going, well, actually, people can actually come in as retail investors and make some money. You don't always need to rely on alternative gatekeepers. And that is very much, as I say, is in the spirit of crypto. The GameStop piece was really interesting because it was the spirit in which it was done. And the little guy taking on the big fish, and they followed the vulnerability and they went in for the kill. And then rather joyously celebrated their kill, let's be honest, and then had a bit of whale of a time with a few of the other stocks that were out there. And simultaneous to that, there's a token listed, Dogecoin, Doggycoin, I don't know however you want to pronounce it, that in the crypto world. And it's the foundations of it are a bit whiffy to start with. But I use it as a sentiment indicator. And when it goes up, it tends to it's not just about buoyancy, it's about that spirit of cryptocurrency and how it was founded. And as you say, that sense of it being egalitarian almost, the sense that anybody and everybody can play a part in it. So when that particular token goes up, it's because we can see that there is a strengthening of that sentiment and and the sentiment behind crypto and the use of digital assets as a freedom, if you like, of financial services. So when GameStop was going bonkers and all of the Wall Street bets guys were having a wonderful time, that spilled over into crypto, but perhaps not in the way that they expected, in the sense that the crypto people also got part of that euphoria, and that sentiment indicator went through the roof with it. But for me, that's a very separate and kind of indicative of a whole other underlying issue within cryptocurrency in terms of its origin story. Whereas if you look at the likes of Ethereum and your XRP, Litecoin, Bitcoin, obviously, and many of the others, there is a technology behind those. There is a purpose behind those, which is very real, very tangible, and very distinct from each other, and part of that new blockchain kind of empowered economy that we're moving into.
And I think that's a really important point you've just made, and that is that people tend to sort of throw all of these new things in together as though it's all sort of part of the same DNA, right? And that's not the way to think about it, as we've said before. I think the Bitcoins and the Ethereums of this world do have purpose, And you can see how over time, as Musk said, well, digital gold, whatever you want to call it, right? I mean, these are essentially becoming cornerstones of a new version of the economy. And I think it's also a vote against, if you like, central banks and central bankers' control and quantitative easing. I mean, that's all part of the game here, I think. So, I think you have to take a bigger picture rather than just sort of putting them all into the speculative bubble, it'll all pop sort of story. That's way too simplistic now.
Yeah, I think so. And so there's the technology piece, there's the economics piece, particularly when you talk about deflationary assets and central bankers. And there's the philosophical piece behind these investments. And people can kind of be in varying degrees, or none at all really, of each of those three buckets. But there is a point and a purpose behind each of these tokens and each of these coins that is worth more than, exactly as you just say, this rather dismissive, oh, they're just speculative, or that they don't know what they're doing. And frankly, that's not true. And I defy anyone to go to MicroStrategy or to go to the team at Tesla and say that you're too dumb and you don't know what you're doing with your money, because quite frankly, that's clearly not the case. So there's something more to it, and it does we now have we're coming up to just shy of 300,000 Australians, verified Australians on our platform. And I defy anyone to go to those 300,000 Aussies and say you don't know what you're doing. Because quite frankly, that dismissive talk, it just doesn't have its place in 2021.
No, that's very interesting. Of those 300,000, what can you say about the demographic footprint?
Yeah, this is a really interesting one, and we've been doing a bit more of a deeper dive into what we have. What we have found is that there's obviously been a strong core group of like the under 30 investor, very much so, and that's going to remain constant, I think, for the foreseeable until they age through the process themselves. But we've also seen a growth in the over 60s coming through, which kind of caught us rather by surprise. So they were about 5% of our user base back in 2017. And now in 2020, when we did the numbers, they've grown to 9%. Now that 4% difference may not seem like much, but keep in mind that's now 9% of a larger base than it was back at that point in time. And particularly considering the over 60s have long been written off and told, oh, you'll never get it, and it's too cutting edge for you. That kind of dismissive talk that we spoke about. And quite clearly that's not the case, because what we've also seen as well has been a marked increase in people investing with their SMSF into crypto. So it's been a fivefold increase in that across 2020. We've now, our single biggest growing sectors that are growing are SMSF and corporate accounts, like non-individual accounts, to the extent that we're hiring specifically for people to come into service those accounts, because we've just seen such a dramatic growth, which is fantastic, but it also tells a story about this pent-up demand that's here in Australia for this asset class.
Well, it is fascinating. And look, I think it goes back to this. I see it in my surveys, right? We've got a group of people who have some savings, right? And would have kept them in the bank had the interest rates been reasonable, but now interest rates are zero on deposits. They have to get market exposure, right? And while some will go into the mainstream and will perhaps be looking at stock markets, it's quite clear to me that more people are actually saying, well, I need to find an alternative strategy. And so they do actually think that that the likes of Bitcoin is worth going with, not least because of course the past performance, not that that's a guide necessarily to future performance, but because they need an alternative to zero interest rates from deposits. And I think that explains quite a lot of the growth that we're seeing. Also, again, in my surveys, I am seeing a greater understanding and comprehension than at least I've heard of Bitcoin amongst those 55 plus compared with 2 or 3 years ago. So it is becoming mainstream now. It isn't just a sort of a sub-30s thing. It is actually definitely more broad. And interestingly, I see also in my SME surveys some SMEs also now touching this as well. So it is becoming much more mainstream.
Yeah, I agree, and that can indicate, or is very indicative of the behaviour that we're seeing on the exchange. Particularly as you say, there's SMEs that are interested in exploring it. I think they've probably got less constraints than the larger corporates that can move at a quicker pelt, and they're more open to trying something new. Because if you start an SME, you're used to being entrepreneurial. You're used to finding new solutions to problems that others have just written off as too hard. And so I'm not surprised that they're the sector that are looking to come into this space. and quite rightly. As well as that, particularly if you're looking at new technologies, if you're looking at like your Ethereums or XRPs, etc., you're looking at that with the purpose behind it. So yeah, it's very true, and I would agree with you, particularly around that chasing of returns, where people are going, okay, well, what can I put some in money, money in to get something out of it? Even my dad, who I know we've spoken about before as well, who owns Bitcoin and he owns a number of different currencies, and he was on to me today going, do we sell? What do we do? And I'm like, oh, Daddy, I'm not a financial advisor. I can't give you advisor advice. But it's true, because he's also going, well, do I sell out now and buy back in? And he's viewing and talking about it in the same way that he does any of his other investments. And I think that's true. People are not looking at this going, oh, it's just a bit of a fun punt and give it a bit of a go. Taking it very seriously. As I said, I mean, they're increasing their average investment size. It's gone up 20% in the last quarter. So, I mean, that's happening for a reason.
Yes, and it's worth, I think, just reflecting on two other things, and that is, of course, as we've discussed previously, the onboarding now requires much more cohesion. So there's a need to actually prove identity and things. So the view that it was just used for nefarious purposes is really just not the story now. Despite what Yellen in the US and what Legrand said in Central Europe, in the ECB about all the criminal activity around Bitcoin. I think that's a bit of a spooky thing, right?
Have you seen the data that came out from Chainalysis, whose very job is to investigate the use of cryptocurrencies for criminal activities? And their numbers for last year was 0.34% of transactions were involved in anything illicit, is their phrasing. 0.34%. And my question is, how many of our banks, either in Australia or anywhere else in the world, can also raise their hands and say, yes, 0.34% of our transactions are illicit? It's simply not the case. And just with those Janet Yellen comments, I know that the first quote that came out painted it in rather a negative tone, and she later corrected herself to talk about the positive aspects of this technology and the benefits that it can bring and how it's worth exploring. So she took the time to not backstep on what she had said, but to add to it further, to add additional color, to say, no, she's not writing this stuff off, but she's obviously quite sensibly trying to take a more moderate and thought through approach, which is great. And obviously, we're very pleased to hear that.
Absolutely. And the second point I was going to touch on was the issue relating to the need just to keep those wallets safe. And you've probably heard, I'm sure you've heard of the guy somewhere, I think it was in Europe, who'd actually lost his computer and went to a tip, and now that computer has codes on it which would be worth millions and millions. So he's actually offered a huge reward to the refuse people to try and find his computer.
God bless that poor man. Yes, certainly that's an area that I would relish. But I would agree with you. I mean, one thing that we are very keen on is for people to self-custody their crypto, which is another part of that spirit of what, the self-reliance that kind of comes to this industry. Rather than relying on an intermediary or a middleman, you have the ability to have control of it yourself. So wallet products that are, kind of Ledger, and there's a few different other brands that are out there, Cool Wallet, there's a few others that are out there. We're not affiliated with any particular one, but we would recommend that clients, once they've purchased their digital asset, then take it into self-custody and manage it themselves. It just gives them greater security and greater control and ownership, and obviously take very good care of your passwords.
Yep. Well, I was talking to someone the other day who actually had one of the very early coins. I think he'd done a bit of mining years ago, and he's sitting on this thing saying, well, it's gone up a lot, but I can't remember the password. So object lesson is you've got to look after it. You've got to treat this with respect, and you have to keep the password safe, because the whole idea of the digital access is it's password control. And if you lose the password, well, that's a problem.
Yeah, and that's you sunk. But I think too that, I mean, this is for the time and place that we're in right now. And, I don't know if anyone can predict with any kind of surety or certainty where we're going to be in 18 months, 2 years time. No one can know, because of the sheer pace of growth of this sector. But what I do know is that regulators are very much aware of it and coming to the party. I'm looking, as I say before, about what's happening out of Europe, which to me is very interesting and fascinating to see how that's going to develop. Because keep in mind, those regulators like the EBA, the ESMA have been looking at this since 2018. So they've thought through kind of some of these different scenarios. and the growth and development opportunities that are there. So for us, it's just such an exciting sector to be in, and also, we're just along for the ride half the time because there's just so much change. It's fantastic, really good.
Right, and one would expect that the trajectory is going to continue to be, upward, but not necessarily linearly upward because of all the factors we've been touching on. But nevertheless, the future looks bright and looks interesting, doesn't it?
Yeah, I think so. And I mean, I'd agree with you. We would expect it to be on an upward trajectory, but with some fits and bursts along the way. This is not an asset in isolation. This is part of a global, and it is a heavily globalized asset. I know there's often the talk of when Chinese New Year comes around, the price of Bitcoin dips because China goes on holidays, and we're going to wait and see if that happens this year, because I would anticipate that effect maybe not be as impactful as it has been in previous years. But this is still nonetheless a space that's growing and developing, but it's also in its own right. So while it sits alongside the pantheon of your usual securities and other kind of asset classes, but it is in there now in and of its own right. So these comparisons to gold, these comparisons to stocks, these comparisons to other financial products are simply to kind of help people adjust their expectations in their own mind and go, oh, okay, it's similar to that. It might have similarities, but it is not that. They are in and of their own right an individual asset class and should be viewed accordingly. So when you're looking at your investment portfolio, that's how you view it, rather than being a little blend of this, a little blend of that. It's not. It is in and of itself its own worthy asset class. So yes, so from our point of view, it's simply a matter of holding on for the ride, because it's 100% of the growth is coming.
Well, I appreciate your time, Caroline, and always good to get it from the front line because you're right there in the middle of it all. And I look forward to another conversation a little bit down the track as things develop.
Yeah, perfect. Thank you so much, Martin.
Thank you very much.